Hello, it's Thursday the 17th. I'm FxPlew and there's a break in the torrential rain, so I've popped out for the market brief. It's all about Jeremy Hunt today. He's due to announce a government spending review in Parliament. Now, apparently Sunak managed to squeeze in a sundowner or two at coup d'etat, snap a few selfies for the gram before jetting back from Bali, but he will be by his side, ready to hold Hunt's hand if he gets nervous today. We already know that taxes will rise and the plan aims to be fair, with everyone sharing the burden of higher taxation, but where he will focus the cuts to public spending, that's more of a surprise though, and I, for one, can't bloody wait. The hope is, of course, that Hunt will deliver a reasonable, achievable plan that will help restore market confidence in the UK. That's after Truss and Kwarteng did pretty much everything they could to cock that up. Reaction to yesterday's inflation data was largely as expected. Headline inflation rose to 11.1%, so further aggressive rate hikes are now expected from the Bank of England. The base rate is currently at 3%, which is thought to be in and around the neutral rate, so further rate hikes from here should take us into restrictive territory, and that should have more effect on inflation. One can only hope. This rate expectation helped sterling higher in the market yesterday. We topped out around 119.45 against the dollar. We opened around 119.05 against the dollar, about 114.65 against the euro, and euro dollar is around 103.85 this morning. Over in the US, activity is beginning to slow as the Fed rate hikes have moved the economy further into restrictive territory. Many have made the call that inflation has topped out, but we probably have more hikes to come from the Fed as they look to finish the job. Wider expectation is for yet another 75 basis point rate hike at the December meeting, and that will end the year with a nice little happy Christmas for all of those on flexible rate mortgages. The Fed is still aiming for a soft landing for the economy, so they'll likely start to taper rates in the near future. If not in December, then most likely we'll see this starting in Q1 next year. The dollar index bounced around a bit yesterday. It rose in reaction to concerns of an escalation in the war in Ukraine, but then it returned to its recent path lower, and we fell to a low of about 105.85 on the day. Well, that's it from me. Hope things brighten up where you are. Join me again tomorrow.
If you do not have a clue, then just tweet through and ask FxPlew.